we'll now move on to Tom. Tom is going to talk us through the issues around foreign exchange and managing exchange risks. So, first of all, I'll pass it over to Tom. And
Okay, so good morning, everyone. Nigel, thanks very much for having us on. Hopefully, everyone can see my screen now and see my presentation here. So a little bit about me. First of all, I'm the Director of Currency Index. We're a specialist foreign currency exchange brokerage, and we predominantly help people who are buying property overseas when it comes to moving their money from sterling into euros or dollars or whatever it might be, and allowing them to get a much better exchange rate than they would just through their bank. We also handle all the payment side of it, so the actual movement of the money as well, ensuring that you get it all done nice and quickly and easily. And what we're going to talk about today is the actual risks that you will face when buying property over in Spain. Alternatively, this applies just as much when you're renting as well, because obviously you're still going to need to move money, even if it's smaller volumes, just to pay for rentals or deposits of that nature as well. So first of all, here are the actual risks. So the main one, and the one that you need to be very aware of, is the exchange rate volatility itself. Brexit is obviously very topical at the moment and very relevant, so we've got a section on that. Security pitfalls. Sadly, moving money around and doing exchanges does open you up to some risks on that side, so I'll run through some of those. And then there's unfamiliar banking information processes and the charges you can expect to unfortunately have to deal with when you're moving money around. First up, onto the actual exchange rate volatility. It's not an area that a lot of people are very aware of. Obviously, some people who maybe worked in financial services historically might know a little bit about it, but people often don't realise that the currency markets are constantly moving. So it doesn't matter day or night, there is always movement, and they're moving second to second. It is not uncommon at all to see differences across a day of 1%, even sometimes more, and there are when big events occur, you can see even wider swings than that. Just to put that into context, obviously £100,000 out into euros in one day, the amount of euros you receive could change by as much as £1,000 worth. The things that move the market are largely economic data releases by the global economy. So obviously the most relevant ones we're going to see with regards to buying in Spain are going to be things that are released in the UK, be it unemployment data, inflation data, GDP, things along those lines, and obviously the same in the Eurozone as well. Political news, so events that happen, you know, if there's a general election, for example, that can move the currency market significantly. And then worldwide events, you know, you can have natural disasters even can move the currency markets. So all of these things can have an impact. So you've got to be very aware when buying a property overseas that it is going to be very vulnerable to those kind of events. Obviously, the situation at the moment with regard to the pandemic is very unprecedented. It doesn't seem to have had ongoing that much impact on one currency or another. It basically seems to be impacting everyone. The US actually at the moment is probably the biggest loser, because I think they're sort of highlighted as one of the countries that's dealing with it particularly badly. And the UK is probably not doing as well as Europe. Therefore, from the currency side, the pound is weaker than the euro at the moment, therefore meaning the swing is slightly in the euro's favour. One thing that I always like to highlight to people when you're talking about buying a property overseas and the exchange rate volatility is, if you're buying a property in the UK and someone said to you, the price is going to be about £200,000, you immediately say to them, no, what's the price? I want to know the exact amount of money it's going to cost me. When you're buying a property overseas, even once you lock in the price and you've made your offer and it's been accepted, you are still essentially unaware of how much that property is going to cost you because of the exchange rate volatility. So you really do need to be very on top of having a strategy for how you're going to manage that, which we'll talk about more as I move on. So onto a graph now. This is a graph of the last 12 months worth of movement for sterling euro. So there are 3 points here. I hope you can see my cursor that I'd like you to particularly focus on. This one here, the first big sort of spike, if you like, was in December last year. Second one is this second spike, which was in January of this year. And then the third one is this big dip, which was in March of this year. Those of you who pay attention to sort of political events and are very sort of up with the news will probably be able to guess what those 3 points represent. But just to put it into a bit of context for you, the election in the UK in December 2019, when the majority government was elected, the pound increased by 2.5 cents against the euro. Which, as I sort of alluded to earlier, for a €200,000 property means that it almost overnight became £3,500 cheaper as a result of that election result. The main reason for that was, and I'll talk about this in the next slide a little, but was all about uncertainty. The biggest problem the currency markets have is uncertainty, and the government getting a majority was seen as allowing them to have a more certain platform for moving forward. Again, in the second spike in January of this year was when the Brexit agreement was reached and when we began that process and left the EU at the end of January. Again, almost overnight, £5,000 cheaper for a €200,000 property. However, on the flip side, during March, when the outbreak occurred and when lockdown happened, the pound was one of the really big losers. The UK economy obviously is going to be very dramatically affected, and we're also almost seeing some of that already. But the UK government was not seen as acting as decisively and quickly as the European governments, and therefore there was a 9.5 cent decrease over the course of not very many days, which for that same €200,000 property means it was going to cost almost £14,500 more, which is a huge, huge amount of difference just on the exchange rate, obviously. Moving on, we obviously have to handle Brexit itself. There are, sorry, I thought there was one more slide, but no, there are certain currency realities which, you know, irrespective of your view of Brexit, whether it's a positive or a negative, the reality is that the currency outcomes are pretty well known and understood at this time. And there are positives and negatives. If we reach a deal by the end of this year, which is obviously a possibility, then it is likely, extremely likely in fact, almost certain that the pound will significantly strengthen. The main reason, point 2 on here, that the pound is so weak is purely uncertainty. We don't know what's going to happen, we don't know when it's going to happen, and we don't know what the outcomes are going to be. And the currency markets hate that. Currency markets essentially move because massive investors and hedge funds move billions of units of currency around. And the simple reality is they will not put those units of currency into sterling and therefore boost the UK investment side if they don't know what's going to happen in that currency zone. So if we see that deal, whether it's a good deal or not a great deal, you will definitely see almost certainly, almost certainly, not quite the same, but it will almost certainly be a positive outcome for the pound, which is obviously good. If you're buying property overseas, you'll see a strengthening of the exchange rate. The negative outcomes are just as certain. If there is no deal, as we have seen every time no deal has come onto the table, the pound will weaken. It is not an exaggeration to suggest that parity with sterling euro, so 1-to-1, or even below, is a possibility. The last time we were very, very close to a no deal scenario, the pound was down as low as 105, 106 against the euro. We're not much higher than that at the moment, but we are a little higher, but that is a real possibility. The bank, a lot of the major banks' treasury guesstimates and forecasts suggest that that sub-parity is a very real possibility. So you really should have that in mind in terms of your timing. Alex alluded earlier that from a residency perspective, it's best to try and get things done ahead of that. You could argue the same from a currency perspective, because I still think percentage-wise, the no deal outcome at the end of this year is probably more likely. As I've already explained, uncertainty really is the killer of the currency markets. Every time during this long process since the 2016 referendum that the pound has been particularly weak, it is because we don't know what's happening. There haven't been deals. There have been losses of, you know, when Theresa May called her election and then lost the majority. The uncertainty that brought was what killed the pound at the time. Couple of more logistical sides of things. A lot of people are worried that when it comes to, if we don't have a deal, what will happen? Will we still be able to move money around so easily? The answer is yes. All of the UK financial institutions, ourselves included, have got strategies in place that allow us to move money in and around Europe just as easily. So you don't need to worry about that at all. The SEPA system, which is a single European payment area, it has already been confirmed that the UK will remain within SEPA even after we officially leave the EU. So there is no concerns on that side, please don't worry. One thing you will have to be aware of, it is already an issue, is that banks in Spain can charge fees for receiving funds. They can charge all sorts of other fees as well, but this is a specific concern. So what we do when we're transferring money to Spain is we bring any transfer below the SEPA threshold, which is €50,000. Some banks, it's actually even lower, but we will split down a payment. So if you're sending 300,000 euros over, for example, we will actually send for you 6 tranches of 50,000 to ensure that you don't get hit with those receiving charges. But you do need to be aware that there are lots of charges with Spanish banks, but none of them are going to be affected or impacted, particularly by leaving the EU. Security pitfalls. This is a very real concern in all industries, in all sections of society, but specifically this part of the world, this part of the process is very vulnerable to this. First of all, and one of the main things to cover off is the actual provider you use for doing your FX and international transfers. Obviously, UK banks on the security side, you're pretty certain are going to be 100%. They're all regulated, they're all very carefully monitored by the FCA and the Ombudsman Service, and subsequently, you're pretty much safe and secure on that side. However, as I've already suggested, and as we'll come to a bit more in a few minutes, their exchange rates are very, very poor. So you really, in my view, I mean, obviously I have a vested interest in suggesting this, but you really should be looking at an FX broker such as Currency Index. When you do these kind of transfers, you will get a much better rate of exchange and a much better service that's targeted to help you with your strategy. There are within the world unregulated FX providers. The UK FX industry is fully regulated. So in order to do what we do, you have to be regulated by the FCA, which means that we are regularly audited, and they come along and make sure we're doing everything correctly. We have to run safeguarded client accounts in the same way a lawyer would, for example. So you're protected. You're just as secure really as using a bank, and there's no real risk to that. However, there is unregulated providers out there. So a lot of them have offshore banking and things along those lines, and some of them are what are called white label organizations. So if you, for example, use one of the bigger currency companies as your provider, but you are just a sales organization selling currency to people, you are essentially piggybacking on that other provider's regulatory position, and that can mean that as an end user yourselves, you are not protected in the same way that you would be using the actual regulated entity itself. There are quite a few UK-based companies who operate in this format. It's very easy to tell because they will be very small. and on their website it will say something along the lines of our regulatory position is covered by our relationship with partner firm XYZ. If you use that firm, the reality is you are not protected in the same way you would be going directly to the company with regulation. So you really do need to be careful of that. And offshore FX providers. There are companies who provide this service based in Canada. There are companies who provide this service based in other countries around the world. You are simply not protected in the same way you are if you using a company regulated in the UK. So I would always recommend using a UK company. The next 2 points are really one point combined. In the world that we live in, everyone obviously is very aware that online systems, emails can always be hacked. And you really need to be very, very conscious of this and double check everything that you do, especially when you're talking about things as important as banking information. We have seen instances where French lawyers' emails have been hacked, and an email has been sent from that French lawyer to the client saying, please pay the funds here, and they unwittingly forward that on to us. We are therefore instructed by the client to send the funds to a place that could, in theory, lose them all of their money because it's a fraudulent account. We have very, very strict compliance processes in place, so we have never encountered an instance like that where we've fallen foul of it. We've encountered plenty of them where the client themselves has fallen foul, but we've always picked them up. So you can rest assured you're going to get a lot of compliance support from a currency broker such as ourselves, but you must do your own checking on everything. The easiest solution to anything is anything you receive paperwork-wise, ring the number of the company that you know from their website or from paperwork you've had from them when you were making inquiries, and double check everything, triple check things. Make sure that you are 100% certain that if you're instructing someone like ourselves to send a lot of money there, that they know absolutely that the bank details are correct. You cannot be too careful on this side. And online invoice fraud is related to the same thing. You receive an invoice from someone, it will probably look 100% genuine. You must make sure that you again do a verbal confirmation, because invoices can very, very easily be fraudulently altered. Onto unfamiliar banking information, process and charges. Obviously, within the UK, we're all very aware of account number and sort code being the standard things that you need. And these days also the banks are very hot on the actual account name matching what they're holding as well. It used to be that the account name wasn't actually even checked. It was always about the account number and the sort code. But now those three things are the critical things for UK transfers, and we all know that. We're all very used to that. When you're sending money over to Spain, the three pieces of information you definitely need are actually very similar. The first one is the IBAN, which stands for International Bank Account Number. The second one is your SWIFT or BIC code. And the third one is, again, the actual name on the account. The name of the bank, the address of the bank, all these things are often asked for, often mentioned, but actually they're irrelevant. It doesn't matter at all. All of them are designated by those other things. So the IBAN itself is made up of about 4 or 5 different sections of numbers. It actually includes, for a UK IBAN, for example, it includes the sort code and the account number of the account, but it also includes things that designate which branch, which bank, and all that sort of thing. So those are the three things you really need to be aware of. The SWIFT code is essentially an international sort code. The SWIFT network is what is used to move money around, and it provides a code to every bank when the bank is set up or when it joins the SWIFT network, and that SWIFT code basically, with the IBAN, provides the route the funds are going to take to get to the destination bank account. IBAN numbers can be very long. 27 for France, 24 for Spain, 25 for Portugal. So you really do need to be very hot on double checking them, triple checking them, as I said earlier, to make sure that you get those numbers correct. If you don't, if an error is made, it will almost certainly be picked up by the remitter. So when we put an IBAN into our banking system, if it's not right, the banking system will tell us, and we'll be able to tell you to double check. So there is always extra layers of double checking, but please do make sure to do those double checks yourselves. Receiving and remitting charges, as I already alluded to, when you send money over to Spain, the receiving banks can charge quite significantly for receiving funds. And when they're returning funds, when they're sending euros out, they will also have quite significant remitting charges and commissions as well. So you do need to be very careful when you're doing that. And aware of the SEPA network, you should be saying to banks, no, you can't do that because of SEPA. And if you can do it because it's too much, then please send it in lower amounts. Moving on to the next point, as I've already said, when we send SEPA payments, we break them down into smaller amounts. And likewise, you should do the same if you're sending SEPA payments in euros over 50,000 for whatever reason. In Spain, Alex will probably know more about this than I do, but bankers' drafts are still a thing, and they often come up as a point of contention because people obviously would much rather use just bank transfers. But they are still quite commonplace, and they do incur significant charges to A, make, and B, to receive. So again, something to be aware of. And finally, bank versus broker. People use banks because they trust them. You might bank with a bank for 50, 60 years, a very long time, and you build up a good relationship. That's obviously very understandable, but you really do need to be aware of the pitfalls when it comes to this part of your process. The exchange rates can be appalling, not far off cash rates, 3 or 4%. Again, 200,000 euro property, you're talking a £6,000 or £7,000 difference. Slower transfers, they inevitably take longer. The person behind the counter in a bank does not know what's going on in the currency markets. They can't help you. They can do the transaction, but they can't tell you when you should do it. And a lack of options. They can move the money for you, but they can't give you all of the different ways of doing it. On the broker, on the flip side to each of those points, often you won't have ever heard of the broker, but as long as they're regulated, that doesn't matter. You will still get looked after in the service that you want and the safety that you need. As I've said, the regulation side, same day, next day transfers, so much quicker. Obviously, the exchange rate's significantly better. The expert currency knowledge, all of the traders at Currency Index have worked doing this for years and years and years. They know what's going on in the market. Picking the right day to do a transaction can be just as important as who you use to do it. And multiple currency purchasing options. We have different contracts types for different to suit different circumstances. Forward contracts are the big thing for mitigating your risk in a volatile market. You can buy your currency today, even if you don't need it for, as Alex said a few minutes ago, 4 to 12 weeks for a purchase. Do you want to wait 12 weeks to know what the rate is for your property purchase? You can lock in that rate now using a forward contract and not have to have all of your sterling to hand if you're waiting for it to come from a property sale or a pension release or something along those lines. So do discuss that, because that is going to help to protect you from the market. And finally, a bit about us. I want to give you information, not just sell Currency Index to you, but we're very good at what we do with multiple award-winning service across all of the years that we've been in existence, more than a decade now. We offer exceptional exchange rates, and we're regulated by the FCA and HMRC in the fullest possible way that we can be. So yes, thank you very much for listening. And